Welcome everyone to the Kendall Report. Remember to subscribe and like these videos. Well, yesterday was a wild ride to say the least, and I know the trolls were out because I was talking about a bottom, and the bottom's still forming. We did not make a new low. We did have some pretty heavy weakness come into some key levels like S3. There was a pretty good trade-off of that number yesterday if you're using the indicators or just following along on the videos. So anyway, tomorrow's FOMC coming out. The surprise that I'm talking about here, I think they're going to have some sort of bullish surprise here. I'm still very positive here. You'll see in a few minutes we're still getting traction in the database. A lot of things are starting to roll in. I saw somebody make a comment, why would you buy now? Well, you know, buy low, sell high, right? So a lot of stocks are starting to form some really interesting patterns here. And if you just look at the rhetoric that's around the markets right now, it's just absolutely insane to say the least. So we had new home sales come out. I've been talking to you folks about this. New home sales down 16.6%. They're collapsing. And it's interesting, in the existing market, there's still some pretty good activity out there. Prices are still hanging in. It's funny that we get a drop in new home sales and lumber rallies, right? Nothing seems to make sense. Of course, we saw interest rates back up a little bit. So, and the dollar, all kinds of stuff was in a counter trend and what they have been lately. But as I look at these new home sales, it's just, these are crazy numbers. These are not good numbers, right? And PMI came in also, the composite PMI was a miss. So all these economics are starting to roll over. And, you know, I think it was just a matter of time until a lot of things that are happening right now start to happen. But from the standpoint of just the crazy things going on in the current administration, you know, this is not, you know, some folks will comment this is a political statement. No, I mean, Joe Biden is completely incompetent, senile, whatever you want to say. Forget, I've had plenty of presidents that I didn't like. I can name them all, and I've had ones I liked, and there's ones I thought I liked, like George W. I used to think I liked him, and I found out who he really was. But the bottom line is that this is just total incompetence. You know, we're sitting here on the edge of World War III, and markets are somehow able to focus, and all of us are able to look beyond all of this craziness that's out there. As far as we come out tomorrow, as I mentioned, FOMC is coming out. We're looking at durable goods, not a big number, but it's supposed to be up 0.8. I wouldn't be surprised if durables start to collapse as well. And there's another scenario, and I've talked about this off and on over the past couple months, is the supply chain issue. I still think there's a wave of tightness coming. I did see some comments on the channel. Some folks wanted me to talk about some of the transportation and things like that. I will go through that. I've actually got a note to review that when it's an appropriate time. So, but there's really not a lot of news to talk about. We'll see what the minutes come out like tomorrow. And then we've got, of course, we get into Thursday, we're going to have the claims and some other home sales and some other things that are coming out on Thursday. But yesterday was wild. At one stage, the S&P was down 2.5. It rallied back, only closed down 0.8. Nasdaq was down 3.8. It came back to close down 2.35. We're seeing a bit of a bounce overnight, and this firmness that we saw coming into the close continued on the reopen, and we traded up, I think, to 39.63.75 on the E-minis, and that is actually S1. I'll go through all those details here in a few minutes. So it shouldn't take us too long to get through this video tonight. So let's go ahead and dig into the database. So we saw 1,220 new buys, 285 sells. There's actually, I didn't go through the whole block of them. I don't have it on the screen here, but over the last 2 weeks, there's been 9,000, I'm going to round these numbers off, 9,900 plus buy signals versus only 2,000 and about 10 sell signals. So the bias has been to the buy side. Most of that's been in the last couple of days. And I continue to see this positive rotation happening. We're a long ways from getting to material point, but now we're at that 29. I set you up for 29 to 28. We're now above that. Next number is 42% to watch. We get above that level, then what we're likely to see here is that the markets will get even more traction here. And I'm not, I keep trying to preface this, I'm not super bullish, but I don't see the downside. I'm going to show you something on the technicals. There's some new downside projections that are pretty big and ugly, but I don't think they're going to be hit. Not at the moment. All the PPMs are absolutely turning up, and this is not the type of environment that we're going to just sell off and keep going down. So I do expect us to continue to rally for 3, 4, 5 days. It could actually rally and stay in a positive configuration for the next couple of weeks. Let's take a look at the S&P. So looking at the S&P here, this configuration, look at the PPMs are just absolutely screaming here. They're positive 0.06 now on PPM1. That's not in trend mode yet, but we are seeing some really strong numbers come out. PPM2 is still down at a 0.25, which is still trend mode. But that number that represents, that is the 21 period moving average, 4,047. I still think we'll see something in the 4,000 handle, 100 points from here, 2-3 days up. There should be a pretty good rejection. Just depends on how the pattern looks when we get to those levels where it's likely to go. But you'll see that PPM 1 and 2 now are clearly starting to move very strongly. And if you look just back here, if you see where my cursor is, you'll see that the last time we did that was right at the lows in March, and we got a decent rally out of this right into some cycles. There's also a weekly cycle that came in for this week. So there's a weekly cycle low due this week, and that suggests that we're going to get multiple weeks of an expansion and otherwise of some sort of rally. Ultimately, I think we can get to the 40 period moving average. That's at 42 handle, but it is coming down fairly quickly. So somewhere mid 41s is certainly very possible here, especially as we close out this month. There might be a little month-end window dressing coming in, something to push the markets a bit higher. Nasdaq is next. We continue to stay under the 10 period moving average, and this is significant, but today will be most likely the test. 12,042 is that 10 period moving average. PPM1 is still negative, PPM2 is negative, so there's some resistance right at these numbers right now. Those numbers are at that 12,042. So probably some resistance if we get up there. That's a pretty good rally. It's a couple hundred points from here. We're up 61 handles, half a point. And if we can get above that level, that would be very positive, and we should head toward the 21 period moving average, 12,452. So I'm looking for a move 12,000 to 12,400, just rounding some numbers off here. And the key number is going to be is just really yesterday's low is going to be the key, which is at 11,576. So that's going to be your big number to watch. But if you look at the PPMs here, just like with the S&P, they're both turning up. This is a pretty positive configuration. Once again, this doesn't mean a new move to all-time new highs. Not projecting anything like that. What we're looking at is just this rebound rally that should set us into the 21 period moving average, ultimately probably getting to the 40. And my expectation is here that we would get some kind of like 5-3-5 type pattern. Otherwise, we get 5 days off the lows, get a retracement for a couple days sideways, and then a move up again for another 5. That puts us, somewhere between 10 and 13 days down the road. Got perfect Fibonacci sequences there that you can keep an eye on and just expect to see the markets move into that level. As long as we stay above yesterday's low will be the key. And if we get below that, then look out for some resumption in the downside. I didn't cover this in the S&P, but you see these 3 dots. Let me go full screen. You see 3 dots underneath the market here, and that's a new projection, but I think it's going to get negated. All we'll have to do is to get actually right above this 12,075, and that will cause that to be negated, and the markets will absolutely should come up into those resistance levels. So here, market is the Russel. Russell had that cycle low due on Tuesday. Right now, RTY is up about 0.35. We should see this continue to move up toward this 21 period moving average here as well. Let me put the RTY up. Right now, the 10 is 1779. We're 1770. The high's been 74. So we just don't have much to clear that. But look at PPM1. It is up at a 0.31. And this is suggesting that we're going to get above the 10, stay above there. We still have a negative PPM2, which says there'll be plenty of resistance right there. We could get a rejection around 1814. And so we most likely the configuration for the short term be 1780, 1814 range. And then if we get PPM3 to turn up, we'll go from there. All I can tell you is if we're going to have a crash, it won't come from this point in time. These PPMs turning like this is, like I said, very similar to what happened in March. And I don't expect as big a magnitude as a rally, especially in the S&P and in the Nasdaq, but I do expect to see this market continued in that configuration across the board on these indexes. Last night I was talking about the 10-year getting into maybe the 274 level. We did that. We got to 272 actually, and we actually have some new Fibonacci downward pattern here. And I was talking about the bonds rallying, or the bonds are rallying, then the market's going up. All the folks that do these 60-40 silliness of this allocation have just been, I guess maybe they're going to get some reprieve where bonds will go up and the market will go up at the same time. But they've been going in tandem, which has just destroyed that entire process, that, or at least they call it a process, of buy and hold and using a 60-40 strategy. But what we're seeing here is the PPMs I've been talking about deteriorating. We're in trend mode down. 0.81 on ppm1. That resistance is up at 286 and it's coming down pretty good. So we're going to cap off on any rallies 282, 285. Nothing here. Bond market should continue to rally here. Yields should come back in a bit more. There is a possibility, and we did have that cycle top come in over on 518 when we were printing 301, but we're likely to come in just a little bit more. I'm going to go to the weekly just so you can see the pattern. This is really what's driving this. We're right on the 10-week moving average, 278. We actually got through it just slightly. We should hover around there and stay between I'm going to call 272, 268 and a half is going to be probably the low on the downside, and the upside will be limited to around 280. We're going to call it 285, 290 would be the absolute top. So we should see a consolidation, and I still think ultimately we could see a bigger sell-off in the bond market than people think, in spite of the, I guess, so-called raising of interest rates by the Fed. So maybe this is what's coming into play. Maybe there's a little dovishness to be heard in this FOMC minutes tomorrow. We'll see what comes out of there. Yield curve wise, a decent day down in yields and yield curve steepened. If you look at this chart over here, let me make that a little wider here. You'll see that this steepening, this is the 13-week versus the 5. And that's just been screaming off of these lows here. So that's a pretty good sign. That's what the Fed wants. The 530s are continuing to move higher as well. The next market is crude. Crude continues to climb that. This is the weekly 10-period moving average. We're seeing PPMs turn back up or maintain a very bullish tone. So crude oil is not going anywhere. The absolute floor here is 104.20. I don't see us getting below that. Look at a market grid. This is a weekly chart. Possibility still of 112.89. That's R1. We've had a high of 11.96 so far, 111.96. So we're just going to continue this slope here. There's really nothing to stop this from doing anything but what it is doing. As you would expect, gold is acting a little better. We're up to 1867. We're down a little bit overnight. This is the weekly. Still got a lot of work to do to get here, but I think what we'll end up doing, 1856, just call it 1900, 1895. We should start to consolidate in that level. If we can hold above 1845 on a weekly basis, we're going to be in pretty good shape to see further recovery in gold here. And this pattern longer term ultimately could end up to be very bullish yet. Final market I'll cover is Bitcoin. Bitcoin continues to be really stable here. The last 3 weeks, if we look at the close on the 15th was 30,276. The close on the 22nd was 30,136. And right now we're trading 29,684, just right in that area, just a flat line. But we're seeing these PPMs starting to try to turn up. And I still think there's a spike risk to around the 200-day moving average right now. That number is moving up a little bit. It was 21. Let me bring that on screen here. It is now at 22. 0.057. So we're continuing to see that number move up. But there is if there's a spike, like I've been saying, if you see anything that looks like 22, that's definitely a point where you're going to want to do some buying on Bitcoin. And I saw some crazy comments about Bitcoin going to 8,000 or something. I guess if you want to get a headline, that's one of the things you can do. This is interesting. I'm going to blow this chart up so you can see it, and we'll finish right here. And as a matter of fact, somebody's talking about Tesla. I think I'll cover Tesla here real quick at the end. But you can see here the narrowness of the market grid on the daily. We just continue to stay in this range. We're still negative across the board here. So there's resistance pretty much right where we're trading right now, 29.8, 32.7, 36. Resistance all the way up. Like I said, I still see some moderate risk, although these PPMs are starting to turn up just a little bit. Okay, let's go ahead and let's do that real quick. One of the things that I had talked about the other night, this is the daily Tesla chart, and normally I don't cover this, but we're seeing a lot of downward acceleration yet on Tesla, but we're getting at that phase. Right now, PPM1 minus 0.36, minus 0.27, and minus 1.26, so big time trend down. The Fibonacci number to watch for, from if we can print down here, 581. I talked about this number the other day, and there's still vulnerability on Tesla down to this level. It's just not a pretty chart. And we go over here to the weekly. I've talked about this as well, is there is some potential for a move down as far as, which really is going to sound crazy, is the 200-day moving average. I think we get a little bit of a bounce, but there's a lot of downward pressure here. Minus 3.02, 2.23, and 0.14. And these are big trend numbers on a weekly basis. So I'd be very cautious here as we go through. Okay, folks, that's going to do for the video tonight. Those of you in the live trading room, we'll see you tomorrow at 1 p.m. And if you haven't got the indicators, the link is on the top, and that will get you the indicators, all 9 of them actually, and you get a free 30 days into our live room. I'll teach you how to use them, doing trade setups and what have you. So anyway, hopefully we'll get some really good setups tomorrow. Hope to see you folks there, and I will talk to you tomorrow night here on YouTube.